Hey guys, Tony, good morning. I actually did not go to work today, so expect to see at least a couple videos from me. I woke up with a little bit of vertigo, so I got a, what is it called? I basically took the day off because I couldn't even like get up from bed. Um, I did get a lot of questions about HD and just the breakout strategy, using it on here and for other stuff. So as you guys know, I did buy that other debit spread for shop, and I'm still in crowd, ETN, and BTU, I think. But I was looking into Home Depot. I don't think I would actually be playing Home Depot right now. It has to break relative highs. In this case, it would actually be all time highs. Um, you guys know that I only like to play certain tickers when they create a shark fin. And the shark fin is, let me see if I can draw this for you guys. Let's do that right there, right? Oh, whoops, delete that. Shark fin looks like this, right? This right here, that exactly, it looks like that. That's what you would call a shark fin, and you can find that shark fin right here. So this pattern, right? This candle pattern is what you would find here. This is what you call, which would call a shark fin, right there. And that's the only way that I would really want to play anything, or actually get into a trade, is if you see something similar to that. So here you can see smaller versions of that, right? Right here you have the relative low of 234. It goes up, comes back down, right here. So you would play the relative low of this right here of 292 down to June 15th. Again, what happens? We have the lows down here. It goes up, goes back down. You have this mountain peak, right? Again, you have a mountain peak, you have an also shark fin. And also you have to give preference to the mountain peaks, right? Because it actually has, not only is a mountain peak, it's a full test of previous support. So you would actually have this testing right here and then jump up. But again, what happened? It did not pass relative highs, right? The only time it actually passed relative highs was right here. This is where it actually crossed it back in the week of March 15th. So it went up, went down, it created that shark fin, right, or an inverse shark fin, and it actually passed relative highs on January 25th. These relative highs, it passed it, it crossed that on March 15th, and then it completely surpassed all-time highs, which is back up here, on the week of March 22nd. And that's probably when I would have gotten in. I would have probably gotten in on March 22nd, just because you guys have a trading range of, the trading range isn't that big, right? So you have a trading range of, let's say, right here down to like here. That's probably going to be like, I'm just kind of guessing at this point, right? But that's sort of going to be your trading range of support. And the only reason I would not have actually used this as a relative high and relative low is because it's too close to previous all-time highs, right? This would be considered all-time highs back here. So I wouldn't have used this range just because it's too close, right? Unless there was like some sort of peak like this. Like if you had this, like, if you had this initial peak like this and it went down like this, then it would be a little bit different, because once it broke this, you have all this wiggle room, right? You have all this wiggle room right here. Like I said, I would have probably only used this peak back here, just because it didn't have that much wiggle room on the upside, right? You only had from like 286 to like 290 to really have some playroom here. So for Home Depot right now, there's only one real way that I would play this, and it would have to break all-time highs, at least from what the chart is, right? All-time highs right now would be up here, which is 345.57, and then you would take it to lows of down here on the March 1st of 2021. So you would basically take it down there, and then again, like always, we can use our forecast tool to aid there. If you want to be, whoops, don't need that. If you want to be really conservative, you can do a 5% drop, which actually I would be setting this up right now. I would probably be setting up at a 5% drop, just to be a little conservative on the call side. And again, 386.72. You move it up to to kind of like the relative placement of, so you can have an even box on the bottom, even box at the top. Again, at your take profit zone. So one, what is that? Is it? Oh, it's adding it over here. No wonder. I was like, what the heck's going on? That's what I was looking for. So adding, dude, what am I doing? Oh, there we go. Jesus. I was like, did it change? I'm like, TradingView just updated without even letting me know. That's essentially what you have to do, right? And then if you want to look at the actual gain that you can possibly get, you would just take it from the actual fib. So the actual relative high back here, you wouldn't actually purchase here. You would purchase somewhere up here, because what you want to see is you want to see a candle close above this fib level. So I'd probably be buying somewhere like around 351, 352, and then the upside to this would basically be 10%. So if it hits that first take profit, you're looking somewhere on the lines of a full 100% gain from your option, depending on how much it actually moves or how fast it moves. Second tier would be 15%, and then you would have it at 21% for the third tier take profit. So you would essentially be looking at 100% for the first call if you buy 3, 150% for the second, and then almost 200% gain from the third call if it hits those numbers. But again, breakout strategy for HT, it definitely is solid, because we have perfect shark fin got created. We do have right now that relative high up here, and it's been trending towards the upside, right? So we do have a bearish market. I do not need that right now. Where are my MAs? What did I do with my MAs? Oh, it's because I have that. So setting up my MAs again, 50 MA over 200 means we're in bullish territory. On the weekly, we still have a lot of bullish power. The stochastic is still moving up, so that means that momentum is just towards the upside, right? Monthly chart still looks perfectly bullish, and on the daily, it looks like we're still running up. So I would even buying calls right now. Even right now, I'm bullish on this, right? So even right now, I'd say there has a strong chance of going to 345. So you can probably do like one call for 345 right now. Let it hit, see if it breaks, and if it does break, then you can run the breakup strategy all the way up to 386. So you can kind of double pick. On the strategy, right? And I can do a full TA on this to kind of give an idea of where I think it's actually going to move to, how much it's going to move, and how long. But right now, the concentration is just the breakout strategy. And this is how I would play it, right? So if I were to guess just on looking at the chart, I'd say it's going to continue up. All the momentum pushes are still towards the upside. And I think the next stop for HD is definitely going to be back at these relative highs of 345. But again, breaking this down a little bit further, just on TA, there's definitely support that I can see, right? There's definitely support. I don't know if I would say 339 would be support. I'd probably say I'd have to remove everything because there's too much going on in the chart, at least with the fibs. And if you guys want a technical analysis on Home Depot, I can definitely release that. But I just wanted to concentrate on the breakout strategy that we've been using just for now. But again, we need a full candle close towards the upside for HT to actually play this, right? So we would actually need a candle that looks like this, that closes something similar to that. That's what we're looking for. We're looking for a candle that closes anywhere from the bottom of the relative high to the high, right? Or anything that actually has more than half the candle close above the relative high. That's what we're looking for. We're looking for a candle that has more of the half of the wick, more of the half of the candle close above. So you can see this candle right here. This is going to close perfectly right here on HT this week candle of starting July 19th for Monday, right? So if you have something like this, you guys see this fib level, this white little line in the middle. If you have a candle closing like this, halfway between the lower half and the upper half of that line, that's what we need to happen over here. We just need to close above this. Either it's going to close above this or it's going to close over this. And that's what we need. That's what I would need to have the confirmation to actually have be in these Home Depots. But I wouldn't, like I said, I wouldn't do anything until, it breaks 345.40, which is previous relative high. So I hope this helps to those that have been asking me for Home Depot and what I would do. I wouldn't consider any of this trading range down here because there's no real there's no actual shark fin, right? You guys know when I trade, I like to have clear indication. So that has to be like, let me see if I can put it down here so I can show you guys a little bit better. They have to be clear. They have to go like this, like that. Clear down like that. And then once it passes, then you guys know that then you guys are taking the sell. Then right here, this is where you would actually take. This is where you would take the actual. You would take the call right there, right? You would take it right there. So it can't be something like Let me see if I can get a different drawing thing to show you guys a lot easier. You know, we need the chart to look to give us clear a clear path, right? So if it looks like this, like that, maybe like this, and it goes down, and then it crosses up here and it beats it, right? You had your relative low, relative high, it beat it out. You would get in somewhere around here and ride it all the way up, right? But you also have resistance here, you have resistance over here. In a case like this, I would want to actually have the breakout from previous lows of here to relative highs. And that way, there's a better chance of this breaking and then all the momentum pushing it towards the upside. But if you have something that's like, you know, you have something that's like this, and then it just kind of trails like this a little bit, and then it goes down a little bit like that. You don't want to be using, you don't want to be using like this relative high and this one. It doesn't make any sense. You're basically just consolidating. You're just trading sideways. You would still use the relative low from here and relative high from over there. That's essentially how you should be using this strategy. It should only be used on clear, absolute clear candle patterns. It should not be used on anything where you're like, oh, maybe that looks like a relative high. Oh, this looks like this. No, it should be absolutely clear, like we have right here for Home Depot, right? You have your relative high up here, relative low. All this trading in between is just consolidation, right? There's no relative high, there's no relative low. You have this relative low right here, but you don't have like it actually retracing back. So if this actually went down, if this was here, this actually maybe went down to this like 618 level, like right here, and then shot up, then I would say, you know what, that's a shark fin, go for it, right? But it's not clear like this. It's not clear like this. You have this whole candle pattern that started from what, March, and it ends back over here in June, right? So that's a full shark fin created for it within a couple months, and that's actually a really good spot to do this. But like I said, I'm not gonna be getting into Home Depot or even looking at this for like another week or two or three, because it doesn't seem like it's gonna rally to relative highs for like another maybe couple weeks. So I'll see you guys later. I hope this helps out. Bye.